yo.
Cool.
Hey, and welcome
Nah,
to
but
Trading the
you
Markets. We just everything here is for educational purposes only. Welcome to Trading the Markets. I'm with you, Joseph. All right. Yeah, you were saying?
No, you can see all of the options, man. They are very expensive. They're significantly more expensive than they were like this time last year or even the year before, man. So I'm really, really careful with the play. Bro, I play the same 5 or 6 option plays over and over and over. I just wait for them to hit my level and hop in, just like you do. You know what I'm saying?
Yeah, like that's the best way to just keep it exclusive. And like
Yeah.
the smaller the better, because you get to know these stocks like your family. So it's really good. But I be playing like random stocks every now and then. But I just know how to get in, when to get in and out, like really quickly.
Right.
Yeah.
Right.
Like I think these were ones I played earlier in the week, but by the end of the week, these were like they ended up going the other way.
Right.
I got
Because the
I got
market
early.
started to reverse. The market started to reverse, but that shit bounced
Mhm.
off of 4,300 hard, didn't
Yeah.
it? I remember I remember the last time it hit it, I was actually surprised. I think the last time it hit it, it was like
Let me
may have
go.
been like May. And I was really surprised that it hit it in May. And then it came back and touched it again. I was like, oh, okay. But
Mhm.
yeah, we got some news coming out this week too. They're talking about 75 basis points.
Yeah, yeah, I'm gonna bring that up. All right, so real quick, I'm
Go
gonna,
ahead, get started, bro. I'll
yeah,
mute.
yeah, you good? Yeah, I'll need your help again.
I'll be here.
Yeah, so you guys see this is spot on the daily, and um, like I know you guys probably wonder like how do I draw these lines, and how do I and what do I look for? What goes through my head? So just real quick, I'm just gonna just do it for you guys. So I'm gonna erase everything. So erase everything. This pink line is a 200-day moving average. I'm just gonna leave it there. It just tracks that. So with a 200-day moving average, it's a long-term trend. Whenever you're above it, you're on the uptrend. When you're below it, you're on a downtrend. So as you can see, we've been on a downtrend, longer term, and then and then we see we went above it. So we started going on an uptrend, but as you can see, ever since Friday, we started coming down, and then today we gapped down, and now we're underneath this 200-day that was acting like support. So now this may continue to become resistance. So the way I'm charting it is I'm really charting to see where the resistance is at and where the support is at and where things are bouncing at. So what I did, you can do it multiple ways, but I use array. I don't know if you guys can see when I pull out the rays right here. This is array. And I start from the swing low, which is this wick right here. And what I'm doing is I'm looking to see like where am I getting the most touches. So right here, if I want to, I can do this as a new support. I can make that line if I want. But if I want to be more distinguished, because this bar definitely did break structure. I don't want to make it look like it's still part of the structure. What I'll do is I'll come and plot the resistance. And the resistance is basically right here. So as you can see, because remember, support and resistance is not just vertical, it's also diagonal. So you have to plot it in every single angle so you can find the path of least resistance. So this is a good trend line right here because you see like price definitely did not go higher from here. So now what I could do is look at it horizontally. So I could make support and resistance right here off of recent price action. So I can put a resistance right here. Let me make it a different color. I'll make it blue. Put a resistance right here, and I'll make a support. I can make a support right here. So there was a support right here. It broke. I could make a secondary support right here based off where the price is at. But the main thing to me is looking at previous structure. So if I do this at the high, I'll see that this was the high of this previous session back here when it's consolidating. So basically, I'm trying to box in the levels and see where price can go. So I could tell myself like this is a level that if price gets back above, I might think about getting calls. But at the same time, I can make another level. I could make another line right here. And basically, I could plot this as the support as a level where, you know, if price breaks down, I could look for continuation. But I could also bring it down. And so it's more about like what is your plan on when you draw these lines? And basically, I'm just trying to box in the highs and the lows. That's all it is. All technical analysis really is the highs and the lows. So that's really all I'm doing. So what I could do is I could make another line. I'll use a trend line, and I can look at the support going up this in this way. And if I do it this way, I can see that this. So if people like, I don't know if you guys really know much about technical analysis, but this is what you call a wedge. It's a rising wedge, and as you can see, it broke and is they tend to break bearish. You can call this a rising wedge. You can call this a bear flag. These are the candlestick patterns that you get to identify the more comfortable and the more experience you have seen and identifying the pattern. So just seeing that the market was in this channel for so long, now that it broke, we know that it's going to break strongly because these bear flags tend to break strongly to the other direction. So now what I would do, I would really watch to see does SPY break the lows. I'm thinking, like I said, it doesn't matter what I think, and our job is not to predict, but to react. So I'm thinking that SPY is going to continue gapping down. It's going to continue. It's going to at least come down and test this level, at least just because of this previous consolidation. And if it does break this, I see it's going down much further because another strategy is gaps, is knowing about gaps. So like right here is a gap. Let me annotate. So you have a couple gaps right here. That the gap principle is that if price continues to go in the direction of the gap, it tends to fill the gap. So if tomorrow we open up red and we start going down, we might just fill that gap. But what I recommend is having two plans. Let's just say the price does bounce up because we never know what's going to happen. So now if the price breaks the highs of today, then that could be an indication to watch to see if we should enter calls. Why? Because like I said, if you just play gaps, there's also another gap to fill right here. Right here. You guys see right here? So there's a gap to fill on the upside right there. And if it goes on the downside, there's a gap to fill down here. But it still is a good ways away from this. So we're just gonna watch and see what price does. But we can still have plays loaded up in case it does what we think. So let me get into some of the news on what's going on. So let me show my screen. And thanks everybody that hopped in. I'm gonna drop the link if you guys are interested in the recording. So real quick, I'll do a real quick review and then I'll jump right into it. So I think most of you guys know this already, but strike price, that's the price that we're locking in. Remember, options are like layaway contracts, and we want to lock in a price so that if it moves, we can have the advantage based off where we bought in at. So once it goes in a direction, and the price of the stock is either above or below our strike price, we can be in the money or we can be out the money. In the money is if it has value. If, like for example, for calls, if it's below the stock price, if your strike price is below the stock price, out the money is if it's the opposite. If your strike price is higher than your stock price. So this is on expiration day. You guys know about that. Exercising. So a lot of people might not know about exercising, but I say options and stocks is basically like condoms and sex, because the purpose of the option is to buy stock. but and it's and the purpose of sex is to procreate. But the contraception, what it does, it takes the pleasure out of it, but you don't, but you so you take the value without actually exercising it and buying stock, without actually having a baby. Did I go over you guys' heads? Is that clear? That was clear for y'all? All right, cool. So break even price. So break even price. When you guys are trading options, you have to pay attention to break even price, because that will tell you how much does it have to move for you to make money. So a lot of times people will pick an option, but the strike price is too far out the money. So even though if it moves in your direction, it didn't move enough. All right. All right. So that's enough review. So interesting thing today. Can I get a reader? Anybody mind reading?
I'll read for you, bro. No news out of the United States, but a lot of things overseas. Rate hike odds skyrocketed. Natural gas, domestic and Europe hit new highs. EU energy recession fears went through the roof. EU falls below parity, which is really, really, really important. Um, a lot of people don't realize what's happening with the dollar and the EU and the euro. It's really important. Lowest since 2002, dollar highest since 2002. I think it actually, yeah, you said it fell below. It's pegged a little, was it like 90 cents, something like that? The
Yeah,
euro is having a
yeah,
rough
right.
year, man.
I got it right here. So this is the Euro USD. So any of you guys that know about Forex, it's always a pair. It's always two different country currencies. So Euro USD, that's showing basically euro against the dollar. So the euro is going down against the dollar. But if I flipped it and I wrote USD euro, you would have seen the whole chart flip where the dollar is beating the euro. Does that make sense to you guys? Anybody confused? Nope. All right. No. All right. So yeah, so there's a couple things I said. So one, natural gas in Europe hit new highs. So this right here is the natural gas fund for Europe. And as you can see, it hit a new high of 276 today. So this is causing a lot of panic in Europe, especially because winter is coming, and Gazprom and some of these companies, they have to do maintenance on the gas lines, and there might be more delays and stuff like that. That's going to affect the future. So that's very important to watch. And then number two, like I was saying, was the euro dollar. So this is euro dollar down. You see how much it was? It was at one point it was like 150, above 150, and now it's under a dollar. And then this is the Dixie, the dollar index, as you can see. So this is the highest the dollar been since 2002. So as you can see, you can go up down like 2002. That's the last time the dollar was this high. So anybody want to know what does that mean? Or anybody got any comments? MJ?
I would say definitely keep an eye on Russia and China, the yuan, and the digital currency. I think this has a lot to do with the digital currency that they're supposed to be rolling out. But Russia, the reason why the natural gas is going crazy in Europe is because Russia controls all of that stuff.
Yeah. Russia.
And they're basically chokeholding all of the EU, which is
Yep.
ultimately crashing their dollar and or the euro.
Yep.
And for the last probably 20 years, Russia and China have been stockpiling gold. So
Yep.
I think it's very important to, when you're trading, you got to make sure you're in tune with the international markets and understand what's going on in the world, especially if you're doing commodities or, Forex or anything like that. It's very, very important. We're at a very, very interesting time in the market, man. Like, people that have been trading for 15 years, they're not seeing some of the stuff that we're seeing right now. So we're at a great time to be learning and understanding what's going on.
Yeah, absolutely, absolutely. What about you? Said we were going over the fact that the dollar went under parity, so the euro is less than the dollar now, and because the dollar is so strong because of everything that's happening in Russia. I don't know if you got any comments, Sid. I don't know if you can even hear me. So but basically, like I was saying, watch the dollar. And anybody mind reading this last bit?
I got you. China stimulates real estate for the first time and cuts rates again. OPEC says they may need to cut output. AMC and heavily shorted stocks decline.
Yeah.
So
I don't know if you guys follow that with the ape coin, the ape AMC. They did a split where now you own ape. It's like a dividend stock. I don't know exactly how to explain it, but that's basically how it was explained to me. And OPEC, anybody know who OPEC is? So OPEC, they are the cartel that controls all the oil throughout the whole world. They decide how much oil to release and how much oil to cut down in the world supply of oil. And then China, you guys know about China, they've been struggling because of the real estate. Like they basically have been doing real estate fraud and it's caught up with them. And now it's such a big problem that the government may have to bail out the real estate companies over there. But so let's get into certain plays that I want you guys to watch. Some of them I played, some of them you can watch, but let me show you guys. Let me go to Thinkorswim real quick. So the first one is the dollar. The UUP is the bullish dollar index ETF, and I'm gonna go into that. So the UUP. So right here, is the UUP. If you go to trade and you go to this is Thinkorswim for anybody wondering, and you type in UUP, that's gonna give you the index for the dollar. And these are the strike price. So the option that I actually have is this one right here. So the $29 call expiring September 16th. So you go trade UUP, you type in the strike price, September 16th, and then you slide down. And basically the way it works on Thinkorswim, anything in the purple is in the money, anything in the black is out the money. The strike prices are right here in the middle. Like me highlight them, the strike price right there in the middle, and then you guys can pick the 29 strike price, and then this expiration date. So as you can see, this one, this one was $37 a contract, purchased on the 19th, and on Friday, and today it's up to $48 per contract. And what I want you guys to understand is that I only have two contracts on this account. So two contract at 37, that's what, 72, 70, $74. So $74 just turned into what's 48 times two, 96. And it's been up one weekend. And I have until the 16th. And if you're wondering, what does the dollar look like? Let's go to the dollar chart. So UUP, you go to the charts real quick. So let's go to the dollar. All right, so this is the dollar, and every bar represents a day. So this is a daily chart. And as you can see, the dollar just came back and retested the highs from previous. So the thing about the dollar is you understand whenever more dollars go into circulation, the dollar goes up. When there's more people saving their dollars, when more people are selling stocks, selling their investments, the dollar goes up. So because of that reason, the dollar tends to, not always, but tends to go up when the market goes down. So this is the dollar on the daily. This is SPY, the market on the daily. So they just seem to have an inverse relationship. And they're not, and the dollar's not the only one that does that with the SPY. So here's a SPY, and then here's the VIX, which is exactly more inverse. You see how it's moving the opposite direction. So what this allows you to do is you can play the same move off of different vehicles, different options. So now let's go back to the dollar, and let's see what we might be able to predict or think. So right now, so I use, this is an indicator right here that I use called the ATR, average true range. It lets you know how much is a stock moving in a certain time frame. So right now we're on the daily. So right now this is moving about 21 cents per day. Now, mind you, 21 cents per day, stocks don't always move up and down. Some days it's up and down. So generally, if I'm going to estimate a move, I'm going to cut it in half just because it goes up and down. And then I'm going to multiply it by 3, 5, or 7 to give myself that much of a cushion in case things don't go up, they start going down. I can have enough time to be right. Because if you guys know options, you pick the expiration on when you think the move will occur. So right now, this is the dollar. And I think that once you break this, I'll put an alert right here. Once we break this, the price may break and come back down. So let's say you're not in this play, you want to get in. The best way for you to get in is to wait for a pullback. So let's say if we do break this level, if we can break this level, don't chase it, wait for it to come back to this level, see if it holds this level or if it comes down, and then I might give you a better entry. All right, it's all about the entry to save you from too much drawdown. So that's the dollar. So, and if I go back on Thinkorswim, like I was saying, these are options that 37 went to 48. Now, with the beauty is that I can pull up the past prices of the option. So do I have it loaded up? Let me see. I don't have it loaded up. So if you go to the option and then you right click it and then you copy it, you can add it to your watch list, right? So now it's on my watch list. Now when I hit, and then this watch list, I can connect it to a number. So I'm gonna connect it to number 9. So now when I go to chart and I go to number 9, I could just pull up my watch list. So right here, I could just scroll through the watch list and it will just pull up everything that I saved. And this is much faster and very helpful when you're day trading so that you can just quickly go to your contracts and trade them and know what's going on with them. Having them all in one place where you can just flip through. Same thing with the stocks. These are my stock watch list. I have that linked to number 1. So now I'm able to just flip through whatever I want to watch without taking too much time. All right. So, but like I was saying, so go back to number 9. And if I look at the dollar, the dollar option that I shared with you guys could see, this is what, based on the hour. So I'm gonna put this on. I'm gonna erase some of these. I got too much stuff on this right now. Studies, I'm gonna take out theoretical price. And that purple line is VWAP, but I don't really need it for this chart. But so if I go on the daily, it'll show me where has this option been. So this option right now is going for about 40, 50 bucks, right? But we see that it had hit a high on the 14th of July. It had hit a high 85. So based off of the technicals and how this chart is moving, this has a chance to definitely keep going higher. But as a rule, I like to buy near the lows. You know, like a better entry would have been basically where I put this alert at. I mean, well, basically where I bought at was like 35. So I would have rather bought in the 30s, you know, than to buy right now at 50. Because you guys are not in this play. If you want to enter this play, you know, you might want to try to get the best price possible. But definitely watch it. If it comes down at all, if the market goes up at all, see if you can get a better price. If not, let's say you want to get it. Let's say you want to get in, right? But you're not sure if it's the best price for you to get in. Basically, if you want to average down, don't put all your money out at once. So let's say you have $200, right? You got $200 that you can throw into an option. So if I was to play this, I'll buy one contract. Let's say I'm gonna have it right now. Buy one contract at 49, right? Now because now let's say if things do go against me and it starts going back down to 35 or 30. Now when I buy my next one at 30, it's gonna be the average price between 49 and 30. So then my average price between the two of them will be in the 30s. And then if it keeps going more against me, I can also average down more. But if it keeps going against me so much, it might not even make sense to be in the trade. It might just make sense to stop loss and be out and to reevaluate. But does anybody have any questions? What's going on, Charles?
I got a question. When you're trading intraday,
Uh,
what time frame do you primarily like? What's your primary time frame that you look at?
so now it's a little difference. If I'm trying to day trade and scalp. So scalp, I'm holding it for minutes max, but day trade, I might hold it for a couple hours, but I'll get rid of it that same day. So let me see. So this is how I do it. So let's say I'm trading SPY, right? Let me go to number one. I think I already have it loaded up. Yeah, SPY, right? So as a day trader, we look at the daily first to look at the direction of the day, right? So after we kind of see the direction of the day, then I go intraday and I just go down each time frame and I just try to look for the areas of interest. Where am I interested on the chart in trading? So I go to the 4 hour, look, zoom in, look at the 4 hour. Okay, I see how it's moving. Then I go to the hour. But really, when it comes to entry, the first time frame I'm gonna look for entry is the 15-minute. After the 15-minute, I'm gonna go into the 5-minute. After the 5-minute, if I'm scalping, I like the 2-minute, time frame. Actually, I don't even think I have it on this chart, but this is the 1 minute. The 1 minute is sometimes the 1 minute too, but sometimes the 1 minute is too dramatic for me. So then I like using the 2-minute. Yeah. So between the 2-minute and the 5-minute is gonna be my primary time frames, but while I'm trading these, I'm going to go into the 15-minute to look at the bigger picture to see if the plan is still going as planned. That makes sense?
Yes, it does. Appreciate it.
No doubt, no doubt. Yeah. Were you going to say something, Travis?
Oh no, man. No, I was just listening. I just tapped in late. I seen your dollar. Did you get out or you stayed in it?
I got out.
Oh,
I
okay.
should have stayed.
Well, you never know, man.
Yeah,
Tomorrow's
you're right. You're right. You never know. So I did the right thing.
tomorrow's another day.
Mm-hmm.
I just saw little news that China got a lot of planes and stuff out there that they're gonna do something to the citrus field or something in Taiwan. But if that America had to defend them, so that if that happened, it'd anything could change at any time. Basically, what I'm saying. It's
That's true. That's true. All of a
it's a lot
sudden,
of data, a lot of factors this week.
And Jackson Hole. That's the main event for this week. Is that Powell's going to Jackson Hole and they're going to talk about their policies and their progress and all that. And depending on what Powell says, he could be either bullish or he could be bearish, depending on what he says. Like if Powell says, even though inflation is going down, we're still going to raise rates, then the market's going to be bearish and it's going to come down. You know what I mean?
Yeah, I'll probably have a little something going both ways right before it.
Mm-hmm.
It's like 30 minutes in, right? It's not before. It's not pre-market, right?
I don't remember. I don't
It's
remember.
10 a.m. or 10 a.m. Eastern Standard Time.
10 a.m.
Right.
Yeah, that's 30 minutes in.
Yeah. No,
So-
more than that. More than 10 a.m. because the market. Oh no, you're right. You're right. 30 minutes in Eastern time. Yeah. Mine open at 8:30.
That's when I start work out here at 7. That's 7 o'clock out here. So
So early.
yeah.
Yeah, that was one thing because moving from New York to Texas, it was like I always had so much time to prepare for the market. Then I moved out here and the market opens an hour early. I'm like, whoa, like time warp.
Man, I gotta be up. I'll be up early getting ready for work when it be opening, man.
Oh, what trade? Oh, the trade this is a trade I want to show you guys today. Walmart. I caught a good trade on Walmart today. So this is Walmart. And you see the I had puts on Walmart. And let me go intraday, 15-minute, so you can see like I entered basically once we crossed the 200-day moving average, that's when I entered. So at one point I entered, right? I'm making profit, then I'm negative, but I had to stay patient to not sell because it was still underneath this. You know what I mean?
Yeah.
Yeah, and then that's basically how I played it today, off Walmart. And I feel like the way it's going, I might catch a gap down tomorrow because my real target is that 132 right in this zone. If we can come back in it.
Yeah, it might happen.
Mhm.
It might- I know everybody from last night, they're gonna be surprised, when the market opened back up. They're gonna be so
Yeah, I mean, like for me, I realize I love short plays more than long plays. I love puts more than like playing long, because this was like another put I had played yesterday, just because a couple of days. So you see, like once it broke this gray little, make it like another color. So once it broke that and then it came back and tested it. That was my sign that. And then the fact that it broke this support right here. So once I get a breaker structure on both supports breaking, that's like my high probability setup that I mostly win from when I play puts like this. You know what I mean? Because this is pretty much similar to Walmart if you look at it. Like it's, well, I think I'm like on a small time frame. It's like the way it broke, like the support anyway. I think it was like maybe on like the small time frame. But yeah, that's the point. But anyway, that's all I got for you guys today. Tap in tomorrow. If you guys are interested in the recordings, reach out to me. It's the coffee link. And thank you for coming to trading the markets today.
all right, man.
All
I
right.
appreciate it. Talk to you later, man.
I no doubt. Hit me up. Peace out.